Why should investors trust crypto? Why do you trust crypto at this point?
Yes, if you look at the blockchains, let's use the Bitcoin blockchain and Ethereum, what you'll find is they have the infrastructure, the technology has not skipped a beat throughout this entire crisis. In fact, the hash rate, Bitcoin's hash rate is at an all-time high, and that is a real indication of the security of the network. On Ethereum, we're seeing the total value staked at $24 billion. That is an all-time high. So we think the infrastructure is working beautifully. As far as Coinbase, this is an onshore regulated company and wanting to help shape regulations. Brian Armstrong, the CEO, and Alicia, CFO, have been leaning into what's going on right now and saying, okay, regulators, we need more clarity in order to protect investors. Those who wanted to get involved with certain types of crypto were forced offshore, and look at what's happened. I think that Coinbase is going to come out here looking very strong. It just lost a very big competitor in FTX.
What is the market missing, though?
No, I think it's more fear. I think many people say we don't know what we don't know. And so what we do is we step back and put a little perspective into the situation here. And what do we have? So the entire crypto asset ecosystem is an $800 billion ecosystem. Apple is 3 times larger in terms of market cap. So that's some perspective. Many people are saying, oh, okay, is this another Lehman? Could we see the domino effect here? I've just given you one reason why. The banking system back in 08, 09, trillions and trillions of dollars, and it was the global banking system. Right now, we have, it seems, from FTX, 5 to 10 billion in creditors. If as FTX has filed bankruptcy, they will be making claims. If you look at Lehman, that was $1.2 trillion in claims. So again, just trying to put perspective, this is fraud. This is Madoff. Madoff was $64 billion in claims. Again, FTX, 5 to 10 billion. Now, I know that crypto assets they attract a lot of attention. This is 3 revolutions we talk about all the time. One new monetary system in terms of the first global, private, meaning not government controlled, digital, rules-based monetary system. That's Bitcoin, a very big idea. DeFi is a very big idea. And while that has been thrown into question in terms of shifting from one exchange to another, we've had a lot of shifting around, but I think DeFi, in terms of taking the middlemen out of financial services and making the ecosystem much more transparent with much less counterparty risk, is going to take off. It will continue to move forward, we believe.
I'm assuming, Cathie, that you're going to hold to your Bitcoin forecast for, $1 million per coin by 2030. That still feels good to you?
Yes, and sometimes you need to battle test. You need to go through crises to see who to see the survivors, first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think, though, the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this? And once they actually do the homework and see what's happened here, I think they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop, because they'll understand it more. We are on the threshold of an explosion in innovation, and crypto is symptomatic of it. The seeds for what is about to happen were planted during the 20 years that ended with the tech and telecom bubble. Those seeds have been gestating for 20 to 25 years, sometimes 30 years, and are now beginning to blossom, and that's not even the right word. They are exploding into existence. So we think there are 5 major platforms, 14 different technologies that are all getting ready to move into the sweet spot of their S-curves. And there are going to be convergences between and among these technologies. So you're going to have one S-curve feeding another and creating explosive energy and explosive growth. And I think in the crypto space, we're going to see blockchain technology and artificial intelligence converge and cause explosive reactions. So it's pretty exciting. Just to get back to investing in the future, when I was trying to explain to someone what I wanted to do before starting ARK, and who's not in our business, he said to me, "Oh, you mean that in the future of investing is investing in the future?" And I said, "You got it." Now, when I started in the business, that's the only way people thought about investing. And then we went through the tech and telecom bust and then the 08-09 meltdown. And we ended up with huge risk aversion in the markets and a tendency to invest very much like the broad-based indices out there. In other words, not adding much more value than the indices themselves. And the indices are where they are because of what has happened historically. The largest companies, the most heavily weighted companies in these indices are there because of their past success. But if we're right, and all of this disruptive innovation is about to explode, well, they are in harm's way. Most investors have never seen exponential growth. They recall seeing it once. It was during the tech and telecom bubble, and that ended badly. And that's why there's been this allergic reaction to innovation and high valuations. Most investors have a 1-year time horizon, maybe 18 months. We have a 5-year investment time horizon. The early years of exponential growth, when we're at low numbers in terms of the base, the numbers don't look that much different from linear growth. But when you go out 5 years, the difference between exponential, so revenue growth rates in the 25 to 50% range per year, and let's say GDP growth, which might be 5% at best, night and day. And if everybody loved what we were doing and they were chasing it, I'd feel much less comfortable. So I'm used to it. I've faced it inside the traditional world as well, as I became an otter duck, and my counterparts were becoming more benchmark sensitive. It seemed like, to them at least, rebellious. So are they afraid of change? I think there's muscle memory associated, certainly at the high level management, associated with the tech and telecom bubble. And many equity leaders went down and basically ceded power to the fixed income market. So many of the leaders of financial firms came out of the fixed income world because of the tech and telecom bust. Many equity leaders lost their jobs then, and then again, 08-09. And so you have this very conservative group of people who really haven't managed equities ever, and actually understand more benchmark sensitivity, since that's how that world works. I suppose this just seems, again, an odd duck running around with her head cut off. They're not willing to look at the kind of research we're doing, which we provide freely out there. In fact, we provide our Tesla model and to help to educate people, saying, look, we've done the research that supports these numbers. And I think the biggest surprise to me is that giving the research away, spoon feeding them with the models, has not changed much. But I think it will change. We're just going to keep, if we are right, then those who are wedded to benchmarks are going to lose their jobs. My aha moment was after Chris had really written the paper, Could Bitcoin Serve the Role of Money? We're just working from a very basic level. And we were talking about a $6 billion market cap at the time, or network value, as we were calling it. And we had Art Laffer take a look at this paper. And he looked at it and helped us. We wanted it to be absolutely correct from an economic point of view. He looked at it and he looked up and he said, wow. He said, this is what I've been looking for all my life. This is a rules-based monetary policy, a global rules-based monetary policy. And I ended up saying, oh, okay, if that's true, how big could this become? And he said, how big is the US monetary base? And at that time it was $4.5 trillion. Now it's $8 trillion, because he was dimensioning it as though it would be the reserve currency, a reserve currency out there. So that global rules-based intermonetary system, hugely important for humanity, I believe. And I share Art's view. I was educated by him, so that's not surprising. And then I think the idea, again, Chris wrote the book, where we're dealing here with a new asset class also for investors, unlike anything we've seen before, unlocking huge productivity and creating inclusion like we've never seen before globally. So I think, and decentralized finance is just mushrooming as we see. It's going viral. We've been evolving our point of view on Ether. When we started our analysis, we were pretty much, and this was with Chris, Bitcoin was what we needed to understand first, but we were keeping our eye on all of the other assets, and we stuck pretty closely to the thesis, the FAT protocol thesis that Chris's partner, Joel Monegro, came up with at Union Square Ventures, which says that the value accrual will take place more at the currency level. And we believe there would be only a few currencies in the world, much there are today. We thought Bitcoin would be the reserve currency, and we were looking for the other currencies. And Ether was showing up as a very strong second. And I have been surprised at how ETH and the Ethereum network is mushrooming with stable coins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need. One of those needs is yield out there. And we see that in the fixed income market, the ridiculous rallies that have taken place, taking junk bond yields down to just a couple of 100 basis points above treasuries. That's nuts. So this hunger for yield is being satisfied by a much more efficient financial ecosystem. And I think many more people are more open-minded to it as well. Let's see, one of the things that has struck me from the beginning, and when Chris started at ARK, which was very close to the beginning of the firm, I remember saying very early on, follow the developers, follow the developers. Well, using that metric, Ethereum is off the charts, whereas Bitcoin is steady as she goes, still increasing, steady as she goes, but clearly Ethereum, decentralized finance, NFTs have hit a responsive chord. I think bringing the creator community into this ecosystem is helping it go a little bit viral more quickly than we would have expected.
So you guys are bullish then on Bitcoin, bullish ETH?
Yes, indeed.